Safes and convertible notes are converted into shares based on the share price of the conversion round, in this case, Series A. However, the safe or convertible note was invested at an earlier date, so those investors require a better deal, which means a lower price per share or more shares per dollar invested. This discount is defined by a discount percent or by a valuation cap, whichever is a better deal for the investor. The discount is usually 20%, which means if Series A investors paid $1 per share, then safe investors get shares at only 80 cents per share. The valuation cap sets a maximum share price for the safe investors. Here, the valuation cap is $8 million. If the conversion round valuation is $16 million, the safe investors will get shares at half the price as Series A, or twice as many shares per dollar invested.